Is Africa really underbanked or hiding billions? Let's find out. In 2004, just 1 in 10 adults in sub-Saharan Africa had a bank account. By 2020, that figure had grown to over half, largely driven by new banking known as mobile money that started in Kenya in 2007.
Mobile money has grown so fast that the total value of transactions in 2023 was $1.4 trillion.
If that were the GDP of a country, it would be the 16th largest economy in the world, ahead of countries like Indonesia, the Netherlands, and Turkey. But has African banking always been recognized? Those stone enclosures in Great Zimbabwe, they weren't just impressive architecture, they were some of the earliest vaults, secure in gold and ivory. The Kingdom of Congo regulated currency. Cowrie shells had a value because a central treasury said so. Sounds familiar? In Zanzibar, elite merchants guaranteed delayed settlements. That's credit centuries ago. What about international money transfer? If Aisha in Senegal wants to send $100 to her friend in Namibia, she can walk to her local agent and hand over the $100. The agent would then call another agent in Namibia and instruct them to pay $100 to her friend. Aisha and her friend are both happy, and the agents settle their debts later. This is known as the Hawala system, and it runs purely on, well, you guessed it, trust. Trust-based lending has also existed for ages through interest-free communal agreements, where one's reputation becomes their credit score. Now, I get what you're thinking. Interest-free lending, community involvement, based on trust. Like really? But doesn't that sound exactly like today's blockchain? Which brings us back to the core question. What is banking? Is banking all about the presence of banks or the purpose they serve?
If the goal is to build savings, issue loans, and enable the secure movement of money, can that be done in a different way? Actually, it can.
Almost everyone knows someone that has been in a rotating savings group, and depending on where you are, you may know them as chamas, tontins, stockvos, or susus. A group of people contribute a fixed amount regularly, and each time, usually at the end of the month, one member takes the whole pot. This goes on around the whole group until all members get their turn. Savings are usually for school fees, emergencies, and yes, even Christmas. In Uganda alone, more than a third of adults are members of savings groups. In South Africa, there's over 50 billion rands saved up in 800,000 groups with 11 million people in total. That's $2.5 billion in community-managed money, which is more than the capital of some banks. Ironically, the same study says people prefer these groups because of mistrust in traditional banking institutions with their high fees and hidden charges. And of course, there's the incredible story of village savings and loan associations. These first emerged in Niger 30 years ago and encouraged people to save, and those who demonstrate commitment get access to loans. For example, Rebecca, who says she's now able to pay school fees, house bills, and is really enjoying life. Would it be entirely wrong to consider this as a form of banking?
If a credit and savings society built for military families after a genocide can transform into a licensed commercial bank, who's to say that a savings group in Soweto may not reach the same heights?
If Hawalas on the continent were unified, what would stop them from becoming the standard for cross-border transactions? When we put all this together, the undeniable force of mobile money, Hawala international transfers, associations at village level, and the billions managed in community savings groups, do you still think Africa is underbanked? Or is it simply banking differently, in a way the world is only beginning to understand. If this has opened your eyes, hit that subscribe button. We remain African Leverage.